The authorities are God's servants, sent for your good. But if you are doing wrong, of course, you should be afraid, for they have the power to punish you. They are God's servants, sent for the very purpose of punishing those who do what is wrong. So you must submit to them, not only to avoid punishment, but also to keep a clear conscience. Verse 6 and 7, which are the last two verses. Pay your taxes too. For these same reasons, for government workers need to be paid. They are serving God in what they do. Verse 7. Give to everyone what you owe them. Pay your taxes and government fees to those who collect them, and give respect and honor to those who are in authority. This is the word of God to us as believers, that we have to take the most important part of helping and leading others to respect and do what is right concerning the new tax regime that is starting in January. So God has enjoined us to pay our taxes, individual, corporate. My prayer is that as we enter into a new regime, God Almighty will give us the grace to do what is right in the mighty name of Jesus. So we have in our midst a very seasoned tax consultant by the name Brother Bode Aremu. Please, let's appreciate him. You don't know what you have. You see, seasoned tax consultant, and I will read quickly his profile. Mr. Olabode is a seasoned chartered accountant who has a wealth of professional experience in auditing, accounting, tax management, and consulting, to mention a few. He has over the years worked in various industries, delivering on various aspects such as financial reporting, control and audit, tax planning, management, process design, and implementation. Brother Bode Aremu holds a master's degree in accounting, bachelor's degree in accounting and finance, higher national diploma in accountancy, and is a fellow of both the Institute of Chartered Accountants of Nigeria as well as Chartered Institute of Taxation of Nigeria. He is an associate of the Business Recovery and Insolvency Practitioners of Nigeria. He is also a member of the Information System Audit Control Association. Mr. Olabode is currently pursuing his PhD at the Babcock University, and he is married with children. Mr. Bode Aremu, Brother Bode Aremu, is the managing partner of BAC Professional Services. And I will also add that he's a worker in the Redeemed Christian Church of God, Lifespring Parish. Please, let's appreciate our brother as he comes forward to enlighten us on the implementation of the new tax regime that you are starting in January 2026. Please, let's appreciate him.
Thank you so much. Thank you so much. I'm glad to be here, and I'm glad to be in our midst. I want to sincerely appreciate the initiator of this program, the person that conceived the idea. And I also want to appreciate the pastorate for the privilege to be here this morning and to take part in this discussion. And as well, I also want to appreciate every other person that's taking one role or the other in bringing this program to reality. I must appreciate our leader in the men's forum. God bless you in Jesus' name. Okay. Good morning, everybody. I want to appreciate the delegates that are present, and as well our delegates that are online. I will be sharing together briefly this very, very important topic. And I want to believe that by the special grace of God, we'll be able to enjoy ourselves and benefit from this discussion. Multimedia, I hope we are ready. Okay. Okay, thank you so much. I want to start this discussion. We all are aware that we have a new tax law. And we have been having some information online. Some are real, some are far from the truth, and a lot of confusion somehow. But the reality of it is that there's a new tax law. And there are some certain provisions in this new tax law that we need to check and look at how we can comply with it so that it will be on a safe side for us as an individual and also for our business. So in the light of this, we'll be throwing light in some of these, and I know we have some questions. I want to believe that by the time we run through this presentation, some of our concerns might have been addressed. Then, after the presentation, there will be room for question. I want to applaud that we follow that pattern, right? Thank you. Let's go ahead. My name remains Bode Aremu, the only Bode Aremu in the armies. I'm lawyer, sir. Okay. The content of what we'll be going through this morning, we have the introduction, then we'll look at task identification. I know there's some issue around that. We're going to clarify that. Then we'll look at the company threshold. Then we'll also look at the income tax for companies. We'll also look at company income tax for individuals. What does this law say about them? Then we'll also look at filing returns. What does it mean? How does it differ from paying tax? We clarify that. Then we'll also look at, after you have filed your return, what will happen? Then we'll look at some offenses, not all of them, but we'll look at some of them. Then we'll conclude. Then we'll have our question and answer. Introduction. I said today, we stand at a pivotal moment in Nigeria. And this is our Nigerian economic journey. The new tax law is not just about taxes. It is about responsibility and positioning ourselves for success in this changing tax environment. In this changing tax environment. The new tax law has introduced reform that affects both individuals and companies. And it is important that we understand this so that we can take advantage of the opportunity that are there, and at the same time, for us to also avoid sanctions, penalties. Very critical for us. Then I said, this session we're having today, it will guide us on how to align ourselves on the part of this tax law and also safeguard our interests. As a business owner, you have an interest. You don't want to wake up one day and somebody is telling you what is not interesting. So we have an interest. We need to safeguard that interest. So together, we need to let us explore how to stand on the right side of the tax law. Not only as a citizen, but as a partner in building a stronger Nigeria. Very, very important. This is our own nation. This is our own country. Let's see how we'll do it and work it together and progress. Next slide. Okay, we are fine. Thank you so much. Now, I want us to start with the task identification because it's very critical to us. Task identification. What is this task identification? The law says every taxable person shall register with the relevant tax authority and obtain a taxpayer identification. We call it tax ID. Then, it's meant for the purpose of complying. Every transaction you want to do when it comes to business, that tax ID must be quoted. Are we together? Taxpayer ID must be quoted. Any transaction you are doing, taxpayer ID must be quoted. Any dealing you are having with a tax authority, that tax ID will be the connecting point, identification point for every individual. It's unique. My home will be totally different from the next person. Okay. Now, we look at it. I'm not in Nigeria. How does that apply to me? I brought in him. A non-resident person that supply, you are not a resident person. Somebody that's not resident in Nigeria, we define it right here so that we clarify that. We said a non-resident person that supplies taxable goods or services to any person in Nigeria or derive income from Nigeria shall register for tax purpose and obtain a tax ID. Meaning that if I'm not in Nigeria, I am doing business in Nigeria, I make a supply to somebody or company in Nigeria, I'm also bound to obtain tax ID. Right? That's what we are saying. It's not only for us that live in Nigeria. If I'm not in Nigeria, but I'm doing business with organization in Nigeria, individual in Nigeria, organization in Nigeria, I'm expected to register, also obtain. That's clear. Now, exception. Provided that a non-resident person who derive only passive income, if you derive only passive income from Nigeria, you may not need to register. What is passive income? You know, it's different from you are doing business, you supply goods or services. I hope you understand now. I hope you understand. Okay. So, because it's very, very critical. What is passive income? Passive income are income that come to you, but that does not involve your much activity in making it to happen. I give you an example. You have a property in Nigeria. You don't live in Nigeria, and you collect your rental income. It's a passive income. You don't have to do anything serious to get that money comes in. You have built a property. Other aspect of the tax that apply to that property is a different thing. But rental income is a passive income to you. I give another example. You are not in Nigeria. You don't live in Nigeria. We get to the definition of those people that are non-resident. We mean non-resident. We'll get to that definition. But you are a non-resident. Let me use that word. Instead of using you don't live in Nigeria. You are non-resident in Nigeria. You have share in a company. And they pay you just token of withholding tax, rental income, interest on that. Definitely that income must have suffered deduction of tax before they pay you. So you may not need to go ahead and register in that regard. Right? Okay. So so let's move forward. I want to define what is non-resident. A non-resident individual means an individual that in any year of assessment, that is 12 calendar months, you are not domiciled in Nigeria. Right? That's one part. And another part is that you don't have a permanent place available for its domestic use in Nigeria. You don't have a permanent place for your domestic use in Nigeria. I hope you get it. If you have a permanent place, I have a house. I'm a non-resident in Nigeria, but I have a house in Nigeria that anytime I come, That's where I stay. Can we say you are not resident? Okay. You have no place of habitual abode where a particular place, anytime you come, you used to stay there. That's the definition. To know whether you are not resident or by definition you are resident. Now, again, you have no substantial economic and immediate family tie in Nigeria. I hope we get it. You have no substantial. The word substantial, is a relative word. It's subject to definition. But economy needs business transaction. And immediate family tie in Nigeria. So if you have a family that you are tied to in Nigeria, it may be difficult for you to claim you are not resident. That's what we are saying. Again, now, you sojourn in Nigeria for a period accounting to an aggregate of less than 180 days in Nigeria. So all the time you've come to Nigeria in a year, within 12 months, it's less than 180 days that you've stayed in Nigeria. So if all these factors apply to you, then we can say you are not resident in Nigeria. You can say you are not resident in Nigeria, and for the purpose of tax ID, you don't need to obtain tax ID. I hope we get it. So we need to look at it to be able to be sure that we can claim that you are not resident in Nigeria. I move forward. Next slide. Now, I continue on the taxpayer ID. I want us to get that clarification so that I will know whether I am to register as for taxpayer ID. Now, a taxable person having a valid tax ID shall apply for or issue it, shall not apply for another one or be issued with another taxpayer ID. Some of these things we are discussing, the section of the law that states it, we try to quote them so that this is real. It's not social media or what they say. This is exactly what the law is saying. So, we have a reference point. Thank you. Now, sorry. Apology for that. Okay. It means that you are not, if you have payer ID, you have tax ID, it means that you are not expected to register for another one. You are not expected to register for another one. Then this payer ID, you cannot transfer it to somebody else. You cannot. It's not transferable. Right? Then, I want to bring out a point that brought up a lot of concern. Then, it said, a person engaged in banking, please let's listen, banking, insurance, stockbroking, or other financial services in Nigeria shall ensure that every taxable person provide a tax ID. That is what led to your account will be blocked. Your account will not be blocked. What will happen in 2026? That is the part of the law that brought about that. What it means is that as an individual, as a company, every of your transaction, the taxpayer ID is important for it. So, and if you have tax ID, then you are fine. Then before I leave this tax ID, and I say every taxable person shall within 30 days of occurrence of a change in its particulars. When you say particulars, you must notify. There is a change in your details. You must notify the relevant tax authority. What are the changes? Very key one. There's a change of name. You need to notify the tax authority that, I beg you, my name don't change. I don't marry you. Please. My name no remain the same. Are we together? Okay. So they should not assume that your name still remain the same. Then, your phone number has changed. Your address has changed. location of your business has changed, you need to inform them. Not informing them attract penalty. We'll get to some of the penalty and the sanction later in. So, but we need to be constant and be familiar with this. So that will help us. Okay. The essence of taxpayer ID is that everybody must be on the tax net. Whether you have to pay tax or not is a different thing entirely. But you must have. We have had one of our leaders that was invited to a place, and he made a classical narration that even if you are a conductor, whatever the nature of what you do, even no matter how messy it is, the first thing is that, are you paying tax on it? So I don't want to go into detail of that example. So I want to leave that payer ID, tax ID for now, and move to another aspect of the discussion. Hope there's any clarification on that, please. Let's note it down so that we'll take it together at the end of this presentation. Okay, company threshold. Company threshold. What I mean by company threshold is that we have small companies, we have big company. What are the responsibility and the timeline that the law says a small company, definition of a small company. Definition of a company, small company means a company that has gross turnover. All the turnover you have in a year is 50 million or less in a year. So you're a small company. It's a small company. Right? Again, provided that the asset, fixed asset of that company is no more than 250 million naira. So, I'll forget it. Let me give an example. You own an hotel. For you to buy the land, let's say you bought the land for 100 million. You put the structure on it for, let's say, 150 million. That's 250 million. Then, the AC, equipment, and other thing take, let's say, 100 million. You're already 350 million. Right? And you start the business. For the first year, let's say all the turnover sales you made is less than 50 million. Can you still categorize yourself as a small business? The answer is no. Because your asset is already more than 250 million. I hope we understand that. Very, very key. Very, very key. Very, very key. You have a factory. You bought equipment of 350 million. Let's say you start a pure water business. You have to buy a land, or you don't buy it, you lease it. But you buy equipment. You store equipment, you store furniture and all of that, machines. By the time you add all those together, your fixed asset is more than 250 million. And you started a business, you don't make 50 million in the first year, or maybe in the second year. You cannot classify yourself as a small business. You cannot classify yourself as a small business. That's what that definition is saying. We need to understand that so that we will not fall victim of what. Now, so turnover for 50 million and below, you don't need to pay tax. That's the implication. If your turnover is less than 50 million, then you are not to pay tax. No tax, provided you meet the definition of small business. Again, for big business, that's the threshold. Your turnover must be 100 million and above. 100 million and above. Those are the ones that are regarded as big business. Okay? So that's... Then, there's one also caveat. Professional services. Professional services has been categorized not as small business any longer. That's part of the changes. For instance, BSc Professional Services. We used to categorize ourselves as small business. Our learned colleague, he used to categorize himself and his business as small business. But come 2026, January, those business are no more small business. The law has its own reason, and the essence is to be able to coordinate some activities, some transactions that those professional services they engage in. So we need to take note of that. So which means there's some responsibility that is expected of business that are not small business. Right? Okay. And okay, let's move forward. Okay, I think we are doing well regarding time. Okay, I want us to look at the income tax. Yes, we are fine. Income tax for companies. Income tax for companies. Now, so if you are a small business, we say you are not to pay tax, so you are a zero tax. So company income tax, which used to be 30% and is also still 30%. A small company is not expected to pay that, right? And also there is what we call development tax. That's 4% now from 2026. It replaced so many taxes that bring together police trust fund, education tax, and the likes of them. So they bring them together. They say, okay, what we'll be doing now is development levy, 4%. So small business also, we are not expected to pay that. Is for big company that their turnover is from 100 millions, 50 millions and above, rather. 50 million and above. Then there's for 50 million and above that you have the turnover, then I will need to clarify something about 50 million and 100 million so that I will not have confusion in that area. So if your turnover is 50 million and above, you are to pay tax. Then the tax rate, company income tax rate is 30%. 30%. Then we have the big one. Big one. We call them multinational. Multinational entities, multinational enterprises. They have to pay income tax of 30%. And in addition, there is a minimum tax that is still also applicable to them. Minimum tax of 15%. For companies that are not multinationals, minimum tax is also not applicable to them. Your turnover may be 50 million and above, but you are not multinational. Then it means that minimum tax is not applicable to you. It's only company income tax that is applicable to you at 30%. So, and then their turnover for those big ones, their turnover must not be less than 20 billion. For those multinational, for them to be able to pay minimum tax at any point in time. You know they are big one now, 20 billion above. Abi, you consider they are big one. Are we together? Okay. Can we go forward? Okay. Thank you so much. I like that signal. Now, let's come to individual. Let's come to individual. Income tax for individual. Income tax for individual. From 2026, what we'll be having, our consolidated review allowance, consolidated relief and allowance before has been changed. So what we have now is that your total gross income, you have 20% of it as your relief. However, that 20% is subject to maximum of 500,000. Somebody is smiling. So, what we are saying is that irrespective of your total income in a year, you have a relief. The law says you have a relief of 20% of it. However, if that 20% is more than 500,000, then we will peg it at 500,000 for you. Right? So that's what the law says. Then, individual earning taxable income, of 800,000 or less in a year, you are not expected to pay tax. Okay? Repeat. Individual that your total income is 100,000 in a year. In a year, all the income you have in a year is 800,000 or less. You are not to pay taxes. You are not to pay income tax. That's what we are saying. Okay? Then we have a progressive tax. We'll come to that. Then I want us to have a little definition on this earnings and blessings. It says income chargeable to tax include income that is chargeable to tax include earnings from business. You earn money from business. It's part of your income. We're not talking of your sales, but we are talking of what you earn from business. It's part of your income. Are we together? It's part of income to you. I will give some example for us to understand clearly. I run a business. Some of us don't pay ourselves salary, which is wrong. Right? Very wrong. I hope we are noting that. You run business, you don't pay yourself salary. Wrong. But I dip my hand into the business to carry out some personal transaction ordinarily I'm supposed to carry out of my salary. Then, that money I dip my hand into represent part of my earnings. If I'm working in a company that is not my own, I will be paid salary. Out of my salary, I will pay my children's school fees. Are we together? Somebody wave hand to me if you are together. You are with me. Out of it, I will pay my children's school fees. But I'm having a business now. I'm not working in a company. I don't pay myself salary. But out of that business, I just transfer to the school. Bam. Does that represent earning to me or not? Somebody help me out. Somebody bail me out. It represents earning. Thank you. Thumb up for you. I like it. Some people don't want to answer me. Okay. So that's an example. So I think it's very, very critical for us. Okay. Now, they now said let me read it again. Income chargeable to tax include earnings from business and all other sources such as profit, prices, winning, honoraria, grant, award, laurel, etc. They are what make up all my income in a year. As I'm here today now, we are sharing together. Let's assume at the end of this presentation, as I will be leaving this environment, the organizer put an envelope. They organize an envelope together and say, Bode Aremu, thank you for coming. And they put it in my pocket. And I did not say no. Okay? I did not say no. So what does that represent? It's part of any to me at the end of the year. I'm supposed to add it to what comes to my as income. That's what we are saying. It's a dash. Hello, ma. I can't hear.
Are you going to disclose that there is a Pentecostal handshake for you?
It's getting interesting, right? Okay, what the law says, let's read it again. Let's read it again. Income chargeable to tax include earnings from business. Okay? And we have explained earnings. Let's assume you are paying yourself salary. As I run business now, I'm paying myself salary. I have an account dedicated to my salary. If my salary has not come, it's a different thing. We hold on. When it comes, he asks where it's going. Please. So, and I say, and all other sources such as profit, prices, winning, honoraria. Can we categorize this Pentecostal and fellowship under honoraria? So, it means that I'm expected to disclose it as part of my income and it should be taxed. Okay, now what does this teach us? I said there's something I bolded in that presentation. Say your record, go back to the, thank you. Your record documentation is critical. This is where something is very critical for business. Business. Many run business like, it's my business now. What are you talking about? And you don't have documents. We need to know that tax is about law, number one. What does the law say? Number two, documentation. If I'm a tax official and I'm coming to your company, I'll be coming to your company on the premises of what the law say, not on the premises of you are my friend. So you need to, whatever you are explaining to me, you need to back it up with documents. If you don't have documents to substantiate that, sorry. It's just as simple as that. I was engaged in a company and they have some issues. The MD called Bode to come and I went. We have a meeting. He explained from beginning to the end and I said, okay, sir, with due respect, I understood all your explanation. And I have special interest and sympathy for the situation at hand. But I'm very sorry. Do you have document for this? He started all the explanation again from beginning, analysis. But at the end of the day, there was no document to back all those explanations. I said, sorry, sir. This is a critical issue. I understood your explanation and it's a sympathetic situation. But to a tax authority, this explanation will not fly. I'm looking at this situation from the perspective of the law. And at the same time, from the perspective of what will the tax authority say. And it's the law that will guide their actions. So it will be very merciful if I'm not looking at it from that perspective and I'm giving you confidence that there's no problem. And there is an issue. So what is the essence of this explanation and this illustration? It should be a takeaway for us that issue of documentation is very, very critical. Very, very critical. That is a bailout. How do I explain that this money is not an income to me? How do I explain it? It's document that will speak to that. Let's move forward. Next slide. Okay, thank you. Yeah. For income tax purposes, for individual, we have some relief in addition to 500,000 maximum or 20% of our gross income. Some of those relief is if you are doing contribution on National Housing Fund, you will remove it from your gross income. Let's assume I'm working somewhere and I'm being paid 100,000 naira per month. That's 1.2 per annum, right? Am I right? And I have a side business that I'm doing, and that one is giving me, let's say, roughly 200,000 naira in a year. If I add it to my salary, that's 1.4, right? Okay. Then, in a gathering like this, just like I said the other, our guy is here. I'm sure there will be something at the end of this. Okay. If something like that comes to my pocket and I did not say no, I did not reject it, so at the end of the year, I'm supposed to also add it. Let's say, talking of like 200,000 also still coming from that, making 1.6. What we are saying is that my total income in a year will be that 1.6. We are fine, right? Now, before we know what will be a month that will be the task will be beaming their light on it, that this is a month you're supposed to pay tax on it. Now, we now look at some other thing that I do. The first thing we look at, what is the 20% on that 1.6? Remove it. Or, whichever is higher, or 500,000, remove it. Right? The next thing is that, did I pay contribution for National Housing Fund in a year? Let's say I'm paying contribution of National Housing Fund in a year of probably 50,000. Then I will remove it also. Right? A practical example, 500,000, National Housing Fund, 50,000. Right? Making 550,000. Let's flow together, right? Now, let's say I'm doing National Health Insurance Scheme. Let's say I'm doing that, I'm also paying 50,000 in a year. Add it to 500,000, 50,000, that's 600,000, right? Are we together? Are we together? Now, pension. Let's assume I'm doing pension also, 50,000 pension in a year. That's 650,000 naira, right? Then, let's say I'm building my house. They said, interest on loan. Owner, I'm building my own house, the house where I'm living, or I've even finished building it. I'm living there, but I'm paying back the loan. So the interest on that loan is also, let's say I'm paying interest of 50,000, add it to it, making 700,000, right? Okay. Then life insurance, let's say I want to do life insurance. I'm paying 50,000 on life insurance in a year. Add it to it, that's 750,000. Are we together? Are we on the same page? We should go ahead. Okay. So at this point, it means that 750,000 is what I can claim now. Out of my 1.6. So remove 750,000 from 1.6. It will give us how much? 850,000. So it means that 850,000 is what tax should now apply on it. Did you get it? It means 850,000 is what tax should be now apply on it. Are we fine? But if you don't do all this contribution, I beg, they're not going to remove them for you. Eh? Are we together? Tap somebody beside you. Did you get what we just analyzed? Okay, so when the total income you have now that is subject to tax is now 850,000. If you look at the second side, that 850,000 naira will now be subject to 15% tax because it falls within 2.2 million. If it's more than 850,000, let's say what is left is 3 million. Now, we take 2.2 million out of it. We tax it at the rate of 15%. If you take 2.2 million out of 3 million, it will give it remaining 800,000. The remaining 800,000 will now be taxed on 18%. So it's graduating. The more your income, the more the tax you will be paid. Let's move off this. I hope we are fine. Okay. Please note down the question. We can just let me quickly wrap up for this presentation so that we now flow into the question. Now, filing returns. You need to quickly do that. Yes. I think you are doing well. I have, please, my Oga, please watch the time for me. Let me know how many minutes I have so that I can speed up. Thank you. Now, filing of returns. Now, we say all individual must file returns, including those exempted from tax, paying taxes. What is return? How does return differ from payment of tax? For example, we said if you are earning as an individual, if you are earning 800,000 or below, you are not to pay income tax. We agree, right? But we did not say you should not file return. What is return? Return is putting down or writing down or putting information together in a prescribed format required by the relevant tax authority and submit it to them. I hope you agree that it's different from payment of tax. For instance, I'm earning less than 800,000 in a year. I'm not to pay income tax, but how do I file my return? I'm an individual. I file my return with the state internal revenue of my state. In this Lagos is LRS, Lagos Internal Revenue Services. At the end of the year, my return is to be filed in January, telling them, this is my employer. In fact, my employer is supposed to do that on his own. We'll come to that. But as an individual, this is my total income in a year. And this is where I'm working, this is where I earn my income, and this is what I earn. As a result of this, I'm not to pay any tax. Home and dry. Submit. And that's all. But in a prescribed format. That's all. It's different from payment of tithes. Many at times we mix together payment of tax and filing of return. They say we should not pay tax. It's not supposed to pay tax. What do you mean by filing of return? Is it not the same thing? I beg you, it's not the same thing though. There's penalty if you don't do that. We'll come to penalty very shortly. Very shortly. Okay. All companies must file return, including those exempted from paying tax. Some of the sections are quoted in this, so that we'll be sure that's what the law is saying. So company, we need to file a return. As the owner of company, owner of business, you file return on behalf of your employee. You file it on behalf of your company, different relevant tax authority. Okay? Okay. So, now I want to quickly look about return on VAT. Now, we said small company, 50 million or less, then your asset is not more than 250 million. You are not to pay income tax, right? Now, when you come to VAT, they say business with turnover of 100 million and below are exempted from filing VAT return. Before, all business must file return in this current tax law. All business must file VAT return. But now, they are saying if your business does not make up to 100 million in a year, then you are not expected to file VAT return. That is tax law. That's the law. Nigerian Tax Administration Acts. Section 22, subsection 4. That's what it's saying. At a point, people are mixing it together. They say 100 million is the small business. 50 million is the small business. I hope we understand what the difference is now. Difference is if you are in filing of return, VAT return, is 100 million. But when you come to income tax, it's 50 million, or your asset is less than 250 million. I hope we are fine. So, this means that business that have turnover of and above mandated to file return. Even that's the clause. Even if you don't make business, if you don't make profits or whatever, you must file return. So when tax return are filed, when you file your return, what will happen to it? Yes, next slide, when you file your return, what will happen to it? Because you are filing return to the tax authority. So when you file return, what will happen to it? What will happen to it is one, tax officer will accept your return without making any additional assessment. They say, fine, good of you, you can go. And you submit it, and nobody gets in touch with you, you are fine. Another way, they can accept the return, and after some days, they can get back to you and say, there is an additional assessment for you that we notice this, and this. So this is additional assessment that you need to pay. Okay? Thank you, sir. Okay, thank you so much. Okay, they can get to you and say, we've looked at your record that you submitted, and you have some additional assessment to pay. Could also happen. It's allowed. Then, tax officer can reject the return and issue administrative assessment. Do you hear that? Do you hear that? They have authority, power to reject return. Somebody is not hearing this.
It's already happening. They give you assessments, and they know that what they are giving you is even above what we are supposed to be given. So already is happening. So they will give you more than what.
Thank you. This is really somehow. All we've been having is when you file return, they will say no. They will raise some observation, additional assessment. But now we're saying you could reject it. Now, if tax authority rejected my return, what can I do? What can I do? And what will be the bailout? I will ask somebody. Somebody will attend to me. I will call name now. I want somebody to attend to me. Please help me with the person behind you. That person behind you. So if tax authority rejected your return, what can you do? What can we do? It's a question for us to discuss. Okay.
Praise the Lord. I will employ an accountant to go and sort it out.
Thank you.
I think you just need to write to them and tell them, your own position of what it is.
Thank you. I want Mami Beke to talk. I want to hear her voice.
I will request this of rejection.
Thank you. Okay. Any? Yeah. No? Okay. Thank you so much. What we can do? We have a couple of things to do. The first thing is that it should be on record. It should be on record that you have submitted your return. Right? Now, somebody cannot reject your return and say, go, I'm not collecting it. There's no record for that. Except you video recording the person that I brought my return here and the person did not collect it. Are we together? I remember some years back when we used to do some return physical. When they say, no, we cannot collect it, strategy is that we have attempted this return to file it. Record it, the situation. Right? But in this dispensation of technology, mostly physical may not come to play. It's most likely going to be online. Okay? Then, if it's now rejected, what can we do? What will be our saving grace? Our saving grace will go back to what we highlighted in the previous slide. What document did you have to back up that your return? That this return is true, is valid, and is correct. Because what could make a tax authority to reject your return? It could be that they notice error, they notice is not complying with one thing or the other, they notice is totally at disparity with the information they have. Are you with me? Totally at disparity with the information they have. Because they may also have some information with them. And they are expected to have information with them. I give an example. A company is incorporated to do business of school. Let's say school. Right? So, ordinarily it's expected that students' fee are paying to the school account and it will represent the income of the school. But as a proprietor, my younger brother, he works in a bank or he works in a place and he has an opportunity to do some transaction in Forex, BDC. And he said, please, my sister, my brother, please, that your account. I need to let me quickly use it for this transaction. And he said, no problem, just you give it to him or her. And within a space of 3 months, BDC, he has pulled transaction of 500 million, 1 billion in a month. It's sold at what margin? 50 kobo. The money came in, transfer it to the aboki that changed it, and you got your commission of 2 kobo, 20 kobo, 50 kobo, 1 naira, and you are making. But before you know it, the inflow and outflow in that bank account is running to 5 billion. Right? I'm giving live example of what has happened. And you have forgotten. Because that account, you don't use it for your school. For one reason or the other. Maybe you have 3 accounts, you are using 2. That one, you don't even touch it at all. Maybe the bank will allow too much to get the money, to pay it there, stress, you abandon it. So when you are releasing your information to your accountant, you only gave information about 2 accounts. You are correct. Abi, no be so. Your accountant also was not aware of the other accounts, and at the end of the day, prepare and submit the account that, these are all these fees that student paid, and that's the income of the school. But the tax authority are looking at, let's say the total income is about, in the school account is about 100 million. And you file your turnover is 100 million. But tax authority is looking at 5 billion somewhere. Money, This is money. I beg, this guy is a liar. It's not true. We reject it. How do you substantiate? What document will you need to prove that this is your income? So there could be several instances or circumstances that can lead to tax authority rejecting the return. Or they may not reject, they might just raise it, additional assessment, and tell you, oh, you say 100 million, they had the 5 billion to it, and raise assessment based on that, and say you should go and pay. They have options. So what is important for us? What is important for us is our documentation. Are we together? What is important to us is our documentation. Let me put a just little note in this. If ordinarily you want to, ordinarily number one error, your account, your school was not incorporated to carry out forest business. That's number one error. Right? So you are carrying out illegal business because every business has subject clause, what you are empowered to do. So it means that your business, what you are using that account for, is already outside the scope of what you are legally empowered to do. Number one. But anyway, that be it as it may, when tax is looking at it, don't worry. You've used it to do business. Where is the tax on it? Tax, you did not pay. You no go agree. You no go agree. So, but normally, even if you have made that error, what you should do is that it shouldn't continue, right? When you have discovered, you have the knowledge of it. But the one you have done, what are you supposed to do? Now, incorporate it to your income. You may not incorporate the whole 5 billion because 5 billion does not represent the income. What represents income from that aspect will be what are the commission, element of the commission that you gain from that transaction, that your brother gain on behalf of your company. So you need to do a documentation that can prove that. Otherwise, the tax authority are not there with you. How would they believe? How would they agree with you that it is forest? Sorry, it's a mistake. How would they agree? How would they believe? So the onus to prove is on us as a business owner. I will get the point. Very valid. Okay, so let's move to the final laps of this presentation. We want to look at some of the offenses. Some of the offenses. Just briefly. During question and answer, some of the other things will still be explained about less. Now, we say failure to register. Failure to register. Penalty is 50,000 naira for the first month. Mowi? You have to register, you did not register. First month is 50,000 naira. Subsequent months is there, not month. Subsequent month is 25,000 naira per month. Are we together? So, let's do the right thing at the right time. Failure to file return. How much? Somebody should mention that figure. Failure to file return, number 2. 100,000 naira the first month. Subsequent month, 50,000 naira. Somebody will tell me, why now? Is that not too much? But I will also ask, why don't you file? Why don't you file the return? Some of this return does not cost us money. And even the time it will take us may not be much. May require some technicality to do it. Just few things. We need to avoid others. Now, the big one, my area of emphasis. Number 3, failure to keep books. Failure to keep books. It is mandatory for us to keep records of our transaction. There is penalty attached to it now. There is penalty attached to it. Apart from the penalty, the company or the individual may suffer sanction. You may suffer tax that you are not supposed to ordinarily pay because you cannot prove it. If you cannot prove it, then if the tax authority did not agree with you, don't call them bad name. If they are doing excess, it's a different thing. But if you have not done your own part, if I have not done my own part, I should not shift the blame or the responsibility to somebody else. Are we together? Please, it's very, very important. I keep emphasizing record because from my little boy experience, it's a challenge. Some people will tell you that, what are you saying, Bode? It's my company. It's my company. I say, Oga, it's a limited liability company. It's your company. Yes, I agree with you. But there are certain things we need to explain. You can't do what you like. There's a law that guides this and this. So when you get to some certain junction, I say, so what do we do? The first year, you still repeat the same thing second year. It shows that you are not ready to do something. Are we together? So there are a couple of failure to grant access for the deployment of technology. If your business has grown to some extent and tax authority said we want to deploy technology, right now there's something we call fiscalization. Fiscalization. What that means is the tax authority, they are using technology to interact with business. Right now what is going on is the big business they are doing first, right? But it is expected and planned that all business will be also involved. But small businesses are not for now. So what does this mean? Is that they deploy technology that interface with your own technology and be able to have relevant information as you carry on the business. So if you say, no, I don't want, you cannot take that decision. You cannot take that decision. That's what the law is saying here. And the penalty is not small, it's huge. It started from 1 million. First day. So subsequent day is still there. Now, if you are to deduct tax, you did not deduct. Failure to do that, penalty is 40% of the amount not deducted. You have staff, you did not deduct payee from them. Well, that's fine, not too bad. But did you deduct it from your own purse and pay it? If you did not, then by the time the tax authority come, it could be a different story, right? Then failure to remit tax deducted. If you deduct tax and you did not remit it. Sorry, just a minute. Sorry, I think somebody is, maybe they didn't deduct from your own salary, Abby. Somebody is paying for you. Okay, that's a bonus to you. So that bonus, we account for it. All right. Now, we have failure to notify changes. You know, we mentioned it the other time. Changes, if you have changes in your record, you need to notify. Failure to notify them that my record don't change. Oh. Let's look at it. Failure to notify changes of address specifically is 100,000 for the first month. So, please, the failure to disclose facts in a dutable instrument. Now, that's another part. There are a couple of things that are not here that will come. Stamp duty. You have an agreement. You bought a property. An agreement has been signed. You did not pay stamp duty on it. Every agreement, legally, you have to pay stamp duty on it. If you don't pay stamp duty on it, legally, you may not be able to prove that document. Use it at the court of law. Thank God we have lawyer in our midst. You may clarify more on that. You may not be able to use that at the court of law. And then, there's also penalty. Inducement. You induce an authorized officer. An officer came to your premises and you want to induce them one way or the other. There's penalty for it. Now, the stamp duty I mentioned, failure to stamp. You did not stamp that document. You have penalty already. Okay? Aiding and abetting. You are not directly involved. You support somebody. It's not your company, but there is an issue and you are supporting them one way or the other. You are involved indirectly. There's a penalty for it. Please, let's take note so that we will not be caught in what does not involve us. The penalty for it is 1 million or imprisonment. How many months? How many days? Imprisonment is imprisonment. Let's leave that out. So, obstruction. You obstruct the tax authority. Falsification. It also have its own counterfeiting document. Hey, okay? Now, the last one I want to mention is general penalty. Offense committed against the act which penalty is not specified. You committed an offense that this act, this tax law did not specifically mention the penalty that should be for it. We say, okay, 1 million. Or upon conviction, not exceeding 3 years imprisonment. So I think we need to be guided in some of the actions that we do so that we will not fall victim of the law. In concluding, we said, as we conclude, let us see the new tax law from the perspective of an opportunity, whether as an individual or as companies. Positioning ourselves on the right side of the tax law will definitely protect us and strengthen our businesses. And I want us to remember that tax is all about the law. Tax is all about the appropriate documentation. And for us to be on the right path of the law, to maximize the benefits, then we need to plan. And compliant is the best plan that we have. That's something we call ignorata juris non excusa. My legal organ will interpret that. It means that excuse, ignorant, is not an excuse. That's why we have enlightenment and we can discuss and we can move forward from there. So I think at this point, that's the end of the presentation. Thank you.
Thank you so much, sir, for very well detailed explanation on what we need to know. There are so many things that we need to know, and there are so many questions that people have sent to us. So we want to take the questions online first. Before then, some people have sent their questions by email. So we want to take the questions. Why, Bode Aremu, please, don't go. So I want to take the questions that were sent by mail. Then we now quickly go to those ones that are sent on the live chat. Then we come to those who are here physically. Please, can you come over so that I can read? I will read the question, then you answer. Take a question, then you answer. Because we have like 9 questions by mail already, by email already. So let me read first question, then we can answer as they come. The first question is it true that all those who have business name should quickly go and register their business name as a limited liability company to save themselves from the new taxes that are in place? Do business name owners need to go and register as a limited liability company in order for them to be able to comply with the new tax regime that is starting in January?
Thank you, sir. I think it depends on individual, and it also depends on the plan that you have as an individual. It depends on the business that you want to do. What is the capacity of that business? There are some businesses that you cannot do with business name. There are some businesses that you cannot do with business name. It requires that you have a limited liability company. So if those businesses you are doing, you want to do, require to have a limited liability company, then you cannot run away from that, except you don't want the business to thrive. Except you don't want the business to thrive. Then, when you come to business name has some taxes that is applicable to them. Limited liability company has some taxes that are applicable to them. So, an individual needs to assess that and be able to, because business name is seen more or less like you are the same with the business. Then there's some also advantage that business name has, in the sense that business name ordinarily you are not expected to appoint an auditor to come and audit your accounts and submit to relevant tax authority. It's not mandated that you do that. However, you can do it personally for you to have a good record of your transactions and be able to have a track record in case anybody come. You'll be able to, it's not that time you'll now be running a task getter. So each of them has his own side, and depending on the angle and the focus you are looking at.
So in other words, the new tax law does not eradicate the need to still continue with business name. So far, your business can carry on under that name.
Yes, that's the position. New tax law recognize business name, recognize limited liability company. As long as it's okay for you, you can continue.
Thank you so much. Now, that's a similar question, but with a different angle. As a business name owner, if you pay yourself salary, will you be paying taxes twice for the business and for yourself? As a business name owner, are you going to be paying tax for your business at the same time paying tax for yourself?
Okay.
Like personal income tax.
Okay. Personal income tax or income tax for individual, you are paying taxes on your own. So if you are a business owner and you are using business name, and that is where the record also still comes, what you are to do is, like we said, how do you remunerate yourself? How do you pay yourself? So if you have record of how you pay yourself, then you are fine. Your tax will be based on what you get, your income. Okay? It's not on all money that come into that business. All the money that come into that business does not represent all the income to you. So you should have record of, as a business owner, even if it's a business name, Record of, I make this money, I made this money, I made this money, and the whole money is 20 million. What are the expenses you incur in executing that business? You have an office, you pay rent, you run generator, you buy stationery, transport. They are expenses. So that is why the whole income cannot be taxed. So, but if we don't have a record to demonstrate, to back it up that this 20 million I made from this business, these are the expenses that I incur. We don't even have profit at the end of the year. I have to borrow from my sister to make up the salary I paid. How you cannot explain that with word of mouth. Nobody will believe you, including myself. You have to explain it to a record. Especially some of us, you borrow money to augment. You don't have track record. You just send the money. I want to pay so person. Send the money to him directly. It's wrong. How do you prove it? Normally, the money should come to your record, to your account. That this money come in and record it as a loan from so person. Now use it for whatever you want to use it for. Then thereafter, when you are paying back, you will pay from your account. But if you ask the person to pay, let me send to so person. When you want to pay back the person, you are paying from your own company account or business account to the person that help you to pay. How do you explain It's difficult. So what is tax is your income. But if you cannot establish all of that, then there may be challenge in what is your income. Thank you.
Thank you so much, sir. Now the next question is, as a business name, do we tax our staff salaries? Do we pay tax or do we deduct tax from our staff salary?
Okay. I think that's part of what we have explained during the presentation. Your staff salary, you are paying somebody 100,000 naira. Before you pay that 100,000 naira, the law mandates it that this new law mandates it that you should deduct the tax, applicable tax, except if that salary is what you are not supposed to pay tax on. Right? The person will collect the whole money. But if it is within the range that the person is supposed to pay tax, you deduct it. But if you don't deduct it, the responsibility is now on you as the business owner. If the tax authority come tomorrow, by adventure, that staff might have even gone. So, the responsibility is now on you. Let's do the right thing at the right. However, if you think you don't want to deduct it, that's a personal decision. Then it means that you need to pay it from the business. Thank you.
Thank you so much, sir. Now, which businesses or which business have to pay VAT? Then how much is VAT? Which business have to pay VAT and how much is to be paid on VAT?
Okay, which business need to pay VAT, how much is? Right now, the VAT is 7.5%, and it's still the same. So with time, the law said there's going to be changes, but now it still maintains 7.5%. Now, the new law states that business that you don't have 100 million in a year, you don't have business with VAT. So, if your business, your income in a year is less than 100 million, what the law is saying is that you don't bother about VAT. So that's the position. But till the end of this 2025, you still have some. But from 2026, the law says if your business is 100 million above or less, then you don't have business with VAT. That's what. VAT, let's get it. VAT is different from income tax. Income tax cap is 50 million cap. And your assets must be less than 250 million. We see the difference so that I will not miss it too.
Thank you, sir. Number question 7 from those who sent the questions via email. Can I still run my business with my personal account?
We should be able to answer that one now. Well, can I still run it? yes, you can run it, but is it good for you? The answer is no. In the eyes of the law, are you at a disadvantage? I say yes. In the eyes of the law, can it implicate you to pay more tax? I say yes. But the choice is still yours. You can still go ahead. But the implication is not good. It's not good for you. One, how do you separate your personal transaction from business transaction? It means that you have exposed all your personal transaction to the tax authority. Because when issue comes, you may need to release that bank statement to them. So, thank you.
So in other words, it's not illegal, but it's not advisable.
Yes.
So what does annual returns mean, and who has to do it? What does annual returns mean, and who has to do it?
Okay. When you talk about annual return is applicable to everybody, whether a corporate entity or an individual. Then it means that annual return means that submitting your information, necessary information, to the relevant tax authority in a prescribed manner, because they are the one that will tell us the prescribed manner, how we should submit it. So in that way is how we should submit it to them. It's different from payment of tax. Submission of return or filing of return does not involve payment of tax, except where you are supposed to pay tax, and when you want to file that return, you cannot file it without paying the tax. I give an example. During the year, you have staff in your company and you are paying the payee. The payee you are supposed to pay is 10,000 naira per month. But by one way or the other, let me say you have additional staff and you forgot to pay payee in addition, because the additional staff will mean the payee will go up, right? So at the end of the year, you now remember that, this additional staff we have, we did not incorporate him or her into the payee. So you want to file a return, it means that you have to incorporate that. Before that return will be accepted, then you need to pay that. That's an example. Or you want to, that's what the right thing you need to do. So it's an oversight. So it means that you need to pay that tax before the return. Because you cannot include the name of that person, his salary, his or her salary, and the tax is supposed to pay without paying it. No, there will be issue in that return. So, thank you.
Thank you so much, sir. So last question from this question sent via email. This has been answered in the course of the discussion, but I just want to ask it again. This tax, will it be looking at our businesses before January 2026, or it will start with January 2026?
Yeah, it's something that we've clarified, just like you said. It's going to be from 2026, January 1. And I also want to bring this one in, that some of the way it will be administered will be unfolding as time goes on. Because as we speak, there are some arrangements that the tax authority are making to make it work and seamless. So if anybody is talking about that right now, then we will not be getting it right. I give an example. TIN, tax ID. We're saying that there will be a unique tax ID for everybody. And that tax ID, the work that is ongoing right now is not in the tax law, because the law permits them to do how it will work. So what is going on right now is that you have a unique tax ID. That same tax ID is what you use with all the tax authority. Just same. You are dealing with FRS, which we metamorphosize to NRS, Nigerian Revenue Services by 2026. You'll be dealing with them. You will also be dealing with state internal revenue services of your respective state. So they are looking at before or right now. You have TIN number. When you come to state internal revenue service, you have what we call payer ID. Payer ID is different from TIN, tax identification. Tax identification is more of federal revenue services, right? Then at a point we have what we call joint tax board TIN number. That one combine the payer ID and so. But right now, what is going on with technology they are deploying now is that unique tax ID will be given and will be allocated. I use the word allocated because if you have tax ID before you have TIN, automatically the new one will be allocated for you. You don't need to do anything. The technology will catch up with that one. You have this before, allocate unique one to you, right? Then the state, they are working out synergy how that will work together so that we'll be using one. It will also bring a level of transparency between states. We have seen so many things when it comes to state. Some people pay tax in Ekiti and they are living in Lagos because they feel like what they will pay in Lagos is that let me go and collect in Ekiti. They collect in Ekiti. After some years, they move to another state. But when it becomes one, that will not be there. It will a lot of transparency in that regard. Thank you.
Thank you so much, sir. So we are taking the questions that were on this chat, live chat. And this is from a property manager. And this question is, how do people who are involved in service business, like property managers, cleaning professionals, how would they pay taxes?
Okay.
You are the owner of a property management company or a service providing company. How do you pay taxes?
Okay. Thank you. The first thing first, how are you doing your business? Are you doing it on your name, Bode Aremu? That's the name I'm using. So my bank account is Bode Aremu. I hope we know, and Bode Aremu does not have CAC certificate. It was not registered with CAC. So it means it's me and my name. So in that case, it's a different case. You have a business name. I can have a business name in my name, Bode Aremu Enterprises, and I register it with CAC. It's no more exactly my name. If I want to go to bank and open an account in that name, Bode Aremu Enterprises, they will ask for my CAC certificate. You know it's different now. Unlike Bode Aremu is my name now, that's the name Papa gave me. It's just birth certificate I need, another thing. No CAC required. Again, you are using limited liability, that also involves CAC. Those are the first layer. The next layer will be what is the level of your income, level of your revenue. If your revenue is within small business, then you can flow with the small business. You are not to pay income tax on that business, especially if it's a limited liability company. You are not expected to pay income tax if your turnover is less than 50 million in a year. So that one is out of it. Then, if it is a business name, then you look at income tax does not apply to business name. As a company, in talk of corporate tax, 30% does not apply. What apply now is, how much do you pay yourself? So if you pay yourself salary, then which you are supposed to do, then how much is it? If the amount you are collecting is still within the amount that you are not to pay tax, then you only need to file return. Those are the obligations you need to do. But if your tax, the income you are earning from that business is more than the amount you are to pay, you are not to pay tax, then you need to pay personal income tax, income tax for individual. then which will be on the example we give, how much is 800 or no, whatever, and your allowances and all of that. You do that and file your return. So those are the how that will flow. Then if you have staff, if your staff also collect less than the amount that is, then you don't need to pay, but you need to file the return. I think those are the obligations that is around whether you are limited or your small business name or then. Of course, if you are running your own in your personal name, Bode and Bode Aremu, then meanwhile, we talk about record. You need to keep record of all this. Thank you.
Thank you so much, sir. Now, this question that has been partly answered before now, but just for clarity. If as a salary earner, you pay tax and run a business, you are earning salary from a company and you are paying tax, do you still pay tax for the business that you are running sideways? Won't it be double payment? If as a salary earner, you pay tax and run a business, do you still pay tax for business? Won't that be double payment?
Okay, that's fine. We already answered the question, right? It has been discussed. Okay, what it means is that you are paying your tax. Your tax is being deducted from where you work. Fantastic. Now, you are running business. The question is, that business you are running, how much are you paying yourself from it? That's what you need to add to your income, because the law say all your income from all your sources. So that's the income you are earning, not the total sale. Not this. Let's get it clear. You are running a side business. The total sale does not represent your income. What represents your income from that is how much you pay yourself, and your record will explain that. Then also, let me take this opportunity to explain, if you have a good record, you have a turnover, sales of 20 million in a year, and it's a business name, you are not, though you are not expected to prepare audited accounts or meet anywhere, but you do detail documentation that show how your income come, each of them, how they come, what did you sell to them, then what you sell to them, how much did you buy them, you have all of that, you remove it from the sales, then the expenses you incur, you have all the document for it, all those ones you take care of before you arrive at, do you have profit at the end of the year or not? So if at the end of the day you remove your salary and all of that, you now have, let's say, 200,000 or 500,000 in a year that is profit, then we are saying, are you supposed to tax that one again? Somebody help me out. You're not to tax that one again. You're not to tax. Since you have paid your own tax based on your salary, the question the tax authority may ask is, if your salary is small and the profit is big, at the end of the year, they'll be looking at it, okay? Then they will also be looking at, your salary is small, and you are living in this environment. Then your children are paying so. How much is your children? I've been in the tax authority where they are questioning my client that how much is the school fees that he is paying for his children. Which school are his children attending? And all of that. So by the time they look at those information, they will look at this. Does he align? Or he does not align? Thank you.
So just to, in addition, if you have a limited liability company, you are paying your personal income tax. That does not mean that your company, a limited liability company too, should not pay the appropriate tax. So I think that is a clarity to that question. Now, this question goes like this. If you run a business in a particular state, like Lagos State, do you still need to pay any federal government taxes? This question came before we went further in the discussion. This has been answered anyway, but just for give us a short answer to this. If you are paying tax in Lagos, do you still need to pay any federal government tax?
I think in that, when you mean federal government tax, are we talking of a company? It depends on the business. If you, irrespective of your location, what you apply to you is state internal revenue, that is personal income tax. If you have paid tax based on your income in another state, then another state should not demand that you should pay personal income tax, which we have in Nigeria currently in operation. If you pay tax in another state and you have transaction in another state, for instance, you have a property in another state and you are from another state, they will still ask you to pay. But if you have paid your tax and your record is okay, you are not expected. And especially with this new tax law, where all the states, you can see, they will see the record you submit. You can submit the same record you submit in your company will be seen, can be exchanged. So I think that's the, except if it's a limited liability company, then company income tax will come to play, which is more or less like a federal tax.
But one of the effects of the new tax law is to harmonize taxes. So apart from the personal income tax that is being paid to the states, other major taxes are controlled by the federal. So now this question is, as a business owner, especially a service provider business, and in a case where your business has to do with the festive period, that is seasonal business, do you pay tax per year? That's the question. I don't know whether
Okay, if your business is seasonal, okay, and what tax do you pay? Even if it's not seasonal, you have to pay personal tax. So personal tax is based on salary you earn. So if you don't earn any salary until the income come, so it's based on income you earn when the business come, it boom, you pay it, but it's going to be on per annum. The calculation is per annum. So then, if it's the aspect of the company tax, then we look at everything from January to the end. You may not make any business in January, February, March, April, December. The whole business could come. It's a whole year. So it's just perspective of what is the tax, what is the tax to be paid and relevant. Again, I remember also one of the questions I was asked. Something real estate mentioned. Yes, real estate, if your business, you have a business, whether a limited liability company or a business name, and your client pay money that is not your money into your account, your commission is your money, right? For instance, you sold property on behalf of your client, and the buyer paid that money into your account. You transfer the money to the seller. What is your income? Is the commission. The volume of that property says is not your turnover. It's not your. So, but you have record. You need record to be able to sort that one and explain it. Thank you.
Thanks. So the most important part of all this is that we need to keep records. Record is very, very important. So the whole era of just doing transaction anyhow is gone. So please let's endeavor to always keep record. Because record always speaks for itself. Now, there this individual that has been asking questions. I think he should come and consult you. So now he's saying, if you skip tax for a year, do you need to pay it subsequently? If one has to be paying tax and you decide to start paying either as individual or a business owner, and you are going to pay, are you going to pay for previous years you have not paid for? Now the tax regime is starting in January, and there's a particular year you are not going to, you didn't pay. Are you going to pay what you are owing? No, we are not talking about this present era, let's assume, because that has been answered, the law will start in January. So all those who are in default now does not meet the new law, because law does not operate in retrospect. Are you the So let's assume that from next year, there's a particular year I didn't pay. Do I need to pay in following years? I didn't pay this year, nobody comes for me. Following year, nobody comes for me. Can they come for me anytime?
Okay. Let's address
Okay, that
this.
is, before you answer that, let's be specific. For those who are in default this year backward, what will happen to them next year?
Okay. Let's approach that question from this perspective. For the new tax law, we should not forget that we should voluntarily submit our information and file return. What it means is that if you have not done that, you're already committing an offense. And there's a penalty for it. So, let's now come to whether present regime or new tax law. As long as you have transaction, you have what you have not done, the best thing is to make it right. Do it immediately. That's the best. And give example. Somebody incorporated a company in 2022, for example. And since 2022, he has not, he didn't do anything in 2022. Maybe he has not even registered with FRS. So, he now got business in 2024, January 2024. And he did the business and they have turnover of, let's say, 25 million. 2025, he has business of 30 million. So, what is expected of that person? Number one, you have not registered with FRS since 2022 that you incorporated the business. You are already on the wrong side of the law. If you approach FRS today and you want to do it, you want to register with them for VAT, you will suffer serious penalty. You will suffer serious penalty. If they are magnanimous, they can waive some and just ask you to pay a token and do it for you. Again, what will happen to the transaction you've had since 2024? As a limited liability company, you are supposed to prepare your audited account and submit it. File your return. You don't file your return, penalty and interest is already counting against you. So, let's look at, in 2024, you have transaction really. Are you supposed to pay tax? When you look at your record, you may not need to pay tax. But your return, have you filed it? It's a different thing. So, and going forward, going into the new tax law, it will still be the same thing. I have not seen any section of the law that say the wrong you have done in the past is forgiven. It is in the church that will do that, not in the tax law. So, but anything we know that we're supposed to do, let's do it as soon as we discover it. Thank you.
So in other words, the liabilities under the old tax laws do not disappear.
It does not
They are
disappear.
still law, so that you will not come and be saying, there's the law under which you have been penalized now is repeat. So the liabilities, if you have any liabilities under the old law that is still in place until December 31st, please let's endeavor to clear them so that we enter the new regime with a clean slate. So these are the last two questions for those online. Then we'll now take the live questions from the audience here. If my business is new and I don't have an history of turnover, will I still file VAT on a monthly basis? If my business is new and I don't have any history of turnover, will I still file VAT on a business basis?
Thank you. Currently,
On a
you
monthly
are...
basis, sorry.
Yes, currently the answer is yes. Currently. But until January 1, 2026, if your business is new and it's a small business, then you are not to file VAT. But currently, you are to file VAT return every month. Return is different from payment of tax. It's different from payment of VAT. Returns is different from payment of VAT. Currently, you have to file return. There's something we call nil return. Tell them, I don't have any transaction that attract VAT to be paid this month, to bam, and submit. That's all. But not doing it attract penalty. Currently. So we have to do that. If your business, if you don't have any transaction, see, at the point of incorporating a business, there are responsibility attached to it. If you are not ready to carry out those responsibilities, or you are not ready for that business, it's better we don't incorporate them. It's better we don't incorporate them. Thank you.
Thank you so much, sir. So the last question from the online audience. If my business is not up to 100 million naira turnover in a year, and I'm offering services, should I charge VAT on those services? My business is not up to 100 million turnover in a year, and I'm offering services. Should I charge VAT on those services?
Okay. If you are professional services, you have to charge VAT because you are not seen as a small business. That's one. The other side is if you are not a professional business, then it means that if your turnover is not up to 100 million, then you don't have business with VAT, according to the new tax law, come 2026. However, the law also still permits that if we don't want to risk anything, that you want to do return, I beg, make I just do them. I don't want any story. You are still allowed to do it. It's not that if you don't do it, if you do it, rather, you will be penalized for doing it. Since the law say you don't need to do it. So you are free, you can do it, and then move on with it.
Thank you so much, sir. Please, let's appreciate him so much for taking time to answer the questions. Now, for those of us who are here physically, do you have any question? If you have any question, please raise up your hand so that we can know the time we allocate. 1, 2, 3, 4, 5, 6, 7. So we are giving the 7 people the time to take their questions.
Praise.
Okay, Brother Lekan will take the last question and we give us the closing remark while Deacon Agboeze will take the closing prayer.
Good day, sir. My question is this. As a small enterprise, like you said, returns every month. Is it that you file returns every month and you keep your records for maybe for the tax, the tax you are expected to pay on your company? That returns is, I don't understand it.
Okay. The question is around returns. And let me explain what return means again. What return means is that you tell the tax authority that this is my information and you submit it. It depends on the information you are submitting, depends on the return you are filing. If you are filing return for VAT currently, as a small business, you are expected to file return every month. The information you'll be supplying for VAT will be that, oh, I have this turnover, I'm supposed to pay this VAT, and I've paid it. Or I have this business and I don't have any VAT to pay, and this is the return, and you submit it. It's online. So there's information you need to key in, your TIN number, the name of your business, all those things. By the time you go to it's the website. You go to their website, log in, you submit, and you will see it. Then there is a dashboard for your company on the tax promise with FRS. On that tax promise, you will see that you have filed your return. If you have not filed for 2 years, 3 years, you will see there that you have not filed for this month. So it's done online, and that's how it works. But if it is a return for, let's say, LRS in Lagos Internal Revenue Service, you go to their own website too. There's a portal there. You log in on the name of your business. Your business have a unique name. If it's a business name, you have business name. If it's a limited liability company, you have RC, your number, everything aligned. Then you file your payee. There is a format that you need to prepare the number of the staff you pay, and you upload it there. Immediately you upload it, and with the evidence of pay me, you click the button. You are done. You are good to go. And from there, your staff, they will be getting their information in their own separate portal that Oga has paid the payee. So they will be seeing how much you pay, that you paid, you have deducted, and you have paid. All things being equal, sometimes it may not reflect on their own hand, but you have the receipt you have paid. So depending on the returns you are filing and where you need to file it. I hope we are clear on that. Thank you.
Then secondly, these inflows, sometimes I can have inflows, but it's not for business. It may be to help out do something. How do you explain it on this tax law now, that this money coming in is not for business, but it's for a specific maybe project or for a gift for somebody, but you have received it. So how are you going to explain it when you are doing your returns for tax or something?
You receive it in your personal account or your business account?
Personal account.
Okay, if you receive it in your personal account, that's not a problem. It's not a problem, except you mingle so many things together. Your personal account, if you use personal account for your business. If you don't use personal account for your business, then there's no much issue. Okay, in that case, the money will be paid to your personal account. And if you separate your business account from personal account, then there's no problem. Then the only issue will also come up if your personal account is your salary account, because your salary account should come to your personal account. So if your salary account is that same personal account you use for ASWEB and whatever, well, you may have a lot of explanation. If there is issue, you may have a lot of explanation. The best thing is to avoid it. The best thing is your salary account should be dedicated to your salary. Don't mingle many other things. You can open an account for other things. Projects, whatever, you can use it for other things. Then, let's also try as much as possible to keep some information. Because even if they come around and there's a need for that, then with your explanation, you see the money that comes in. It's from this. We have this social program. Different people pay this money. And it will also see how the money go out. The transparency will reveal, right? Even though it's not advisable to mix personal account of your salary with your personal account of other business. No, it's not advisable. Then, especially business account with personal account, no, that one. I hope we are fine with that. Thank you.
Good afternoon, Prof. And good afternoon, House. So my question is taken from the last question of the person that sent a question online about paying VAT if your business is not earning up to 100 million. So will you charge VAT if your business is not earning up to 100 million? So my question is, how do you know this is December? I'm entering January. I have a contract to do. I didn't charge VAT on that contract. Then towards December, I have another business that will give me even more than 100 million. How do I reconcile the other VAT that I didn't charge in other businesses?
Thank you so much. That's very fantastic. Fantastic question. Now, what the law says is your business is less than 100 million. Now, you are running business, and in the past year, your business has not been up to 100 million. So you have a good position to say you are not charging VAT. This year, it's still coming up 50 million, 20 million, 30 million. If you don't envisage that it will be 100 million, then you don't need to charge. But if any business coming that you know that this business, let's assume you are already at 80 million and this is December, and you got a business of 20 million or 25 million, you know automatically that this business crystallizing, you are hitting 100 million and above. Then you charge, you start from that. You start from that. So that transaction that is linking you to 100 million and above, that will be your starting point. So all other one, you cannot be held responsible for that. But if you fail to start at that point, that will be another thing. Thank you.
Praise the Lord. I want to find out an inflow into my personal account, for example, for a family project that is running into thousands of naira. What is the risk that I stand, to face, from the government? What is the risk that I stand to face? And I want to find out also, there used to be something like they call it tax rebate several years ago. When I was working, we always look forward to it because the tax rebate is something like at the end of the way they will calculate it from a MIS department, is something that will be credited to your account. But does it still operate up till now?
Okay, fantastic question. Tax rebates and inflow for a project that is running to thousands of naira, that's not a problem. But if it's running to millions of naira, then okay. The truth about it is that inflow, it exposes the person to income tax, personal income tax. And if we have a record that can clarify it, that just like we said, how the money flow in is not a money from business, and how it flow out, then If you have a tax ID, all this will be tracked. You will be paying tax, no matter how small, except if you have declared your own tax by yourself and it's confirmed that you don't have to pay tax, you are between the exempted people, you have to pay tax. Let's summarize at that point. Yes, next question.
Good morning.
Ma? It's what? When you come to a age, with a taxable person, I have not come across the particular age that is put there for a limit, right? But what is important is that even if you are at any age, if you have the income and you do your return, that at the end of the day, I don't have to pay tax. Your home and dry. I have not come across it. So it may be, I will do research about that and know it. It's noted. Yes. Last question. Okay, thank you.
So my question is, so for people that work and have businesses, yeah, their personal income from their business, obviously the personal income from the company we work for, obviously the company handles the taxes, and then we have to do the ones for our businesses. But then how do we link that? Like, is that something the company we work for has to give us, so that when we're filing our returns or whatever at the end of the year, we can indicate that we also receive blah, 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 or all we have to do is put in ours, and then because of our tax ID number, they know all the...
Thank you. Very fantastic question. Now, that's currently, many of these things are not working. But in 2026, what is going on is that the technology will drive it. When you are filing your return, everyone's supposed to file his or her return. So when you are filing your return, you file a return of the income you earn from your company you work for. How much is it? They pay me 5.5 million per annum. And there will be a space there for you to put in the ID of that company. Immediately you put in the ID of that company, they connect to them. You are fine on that. Then you now add the one you make personally to it. Then, if there's any additional tax you need to pay, which you have not paid based on the business you do, then you pay it, right? But if there's none, then you just submit your return. But the link is there already. Thank you.
Praise the Lord. Please, my question is, we've been talking about we giving the government benefiting. My question is on the other side now. What do we stand to get as a corporate body and individual? Because I used to hear that in the West, there's a kind of cash which they pay them, they pay their citizen.
Okay.
So you understand the terminology for that. Thank you.
Thank you. We're getting there gradually in Nigeria. Hello. We're getting there gradually in Nigeria.
Praise the Lord. Please, I have one question here. Okay, sorry.
So this question is a question that we face regularly in our business. Okay, we're getting better in Nigeria, and we'll get there very shortly. I like it, this church. So, okay, the irony of it is that the law mandated the primary responsibility of the government is for the security of life and property of the citizenry. Then, after that, provision of amenity and all that. But it's just something we need to know, that tax law does not mandate the government that after they have collected the revenue, this is what they must use it to do to the citizen in return. there's no mandate. It's not mandatory in the. It's not. There's no specific in the law. So, what is done is that after the primary responsibility of the security of life and property, then amenities can be looked into and be done in that regard. But as far as the Nigeria is concerned, I think we'll be getting better gradually. Thank you. Let me say this off record.
Sorry, can I ask this question? After this one.
Let's finish.
Okay.
Let's finish before we do that.
Somebody was asking.
Yes.
Sorry, the person who is not here, but he sent the question when we have started. A business owner has millions in his account, and he was not paying tax. Probably that money was given to the business owner by friends and family. Now he has started working, and he is paying tax. Will the new tax law affect his money that was in the account before? That is the person's question.
Okay. The money is already in his account. The law does not tax your money. Does not tax your money in the account. So what they tax is it that a business? Is it that your income? So if that money is not your income and you can explain it, then you should not have any fear. So it might be there for you. They will contribute that for you to start a business that will be a capital for you in the future for any reason. But you should be able to explain that, and we'll be fine. Okay, I think my Oga wants to ask a question.
This one you're embarrassing me now. I don't know who is your guy here. I'll ask my question before I do the closing remark that I've been asked to do. My question is this: what is the difference between turnover and asset under management? What is the difference between turnover and asset under management? Some businesses manage assets on behalf of their clients. Those assets will be in their books if it's a long-term proposition. Under their books is captured as asset under management. Now, the taxman will look at the books and see very huge figure under your balance sheets as an asset, what's under management. So how do you differentiate? How do they see it? How do we manage it? That is my question.
Thank you, sir. You see that why we say Oga is the technical side of the question. Okay. Asset under management is not your income. So it's not be taxed. If by virtue of agreements or yes, let me use the agreement, the asset is brought to your book as a company, then that could define you as, if it's huge, can define you whether you belong to small company or big company. However, asset under management, you are earning income for doing it on behalf of people. So what are you getting from that management? Is it commission? Is it a particular percentage? Is it what? That is what will represent your own income and turnover. So if the asset itself, by virtue of agreement, it may be in your book, it may not be in your book, that's not a problem. But for the income, is what are you earning? I'm doing this on your behalf, what are you paying me? That's what will represent your income, sir. Thank you so much. Before you do the other side of the assignment, I think you can be off now.
We'll come back to that. On behalf of the church and on behalf of men, we want to sincerely thank our experts. He's not a professor yet, but I know he's a doctor, Dr. Bode Aremu. We are glad, and this is beautiful. For some of us that thought we know everything about tax, the scope is widening and it's getting bigger and bigger, and we need to stay on the right path of the law. We are grateful. This is very impactful. I think that the next level for us, moving forward, because this is a season of moving forward, is to come back and then begin to dimension this tax law on how it can help our businesses. There's an angle to tax that if you understand it efficiently and you apply it efficiently, it helps you to actually energize your business, both as a personal business owner or a liability company. So we will find time and sit down with you and structure a time to look at those in depth. And believe me, it might not be for everybody, but for people that are really, really running business, that are serious on how to know. Some call it tax avoidance, but I didn't want to use that word here. But there's a way we can actually understand, balance it. That's the right word, man. Balance it to help our business grow. Many times we run away from tax when actually tax is good for us to, if you look at those personal income charts, you will see that if you pay some certain contributions, it actually reduces the amount of tax that you pay. Those things, we will say, what do I want to do with the National Housing Fund? We will say, I don't want to do pension. I want to say, why will I go and take mortgage? I will say, I don't want to do life insurance. But however, it is clear that if we do those things, it reduces our tax exposure. So those are the things that we need to come back and break it down, not only for the individual, even for business owners, and even how to use it to improve our businesses. So we are grateful. We can't allow you to go without praying for you. I would like us to please stretch off our hand to our pastor. It's a pastor. That the market is getting bigger. The market of tax is getting bigger. And that as this market become bigger, so also his share of the market will become bigger. Let's pray for him that in this market, the market is running to trillions of naira now. His own share will be bigger. He will be a strong player in that market. He will be known worldwide as a tax expert. The country will know him. Governments will know him. Corporate entities will know him. They will see him and they will see the value that radiates for him. His understanding and knowledge of tax will be enhanced. His clientele base will be enhanced. That the Lord that he had come to water today, that the Lord will water him. The Lord will promote him. He will become an excellent tool in the hands of God. And when all the money begin to roll in, you begin to pour more into the house of God in the mighty name of Jesus. Thank you, Father. In Jesus' mighty name, we have prayed. Thank you, sir. Thank you so much. I'm your client. So, this my guy. Once again, I want to say thank you. We know that there are so many online questions. Even here, people still want to ask questions. But the truth is that part of following the law is discipline. Discipline is always very important. Allowance has been given from the day this was advertised for people to ask questions online. It wasn't today. So if you are coming at the end of the program to begin to throw questions, you need to check those things. To follow law requires discipline. And people must understand that. And for us that are here, once we are done, if you have many questions, you can come back to our expert and we'll answer those questions. Thank you. God bless you.